We now turn to the economy. Once again, the outlook for this year's growth has been lowered. The Bank of Korea projects an economic expansion of 1.6% to 1.7%. This estimate assumes that the political climate will stabilize soon.
The Bank of Korea froze the key interest rate due to concerns remaining about the soaring exchange rates. The central bank said sluggish domestic demand points to the need to slash the basic rate immediately and warned of the possibility of an unscheduled interim review of the nation's economic growth rate.
저희들이 지금 생각하는 중간 점검, 워낙 중요한 변화가 생겼기 때문에 같이 쉬어야 할 생각입니다.
As a result, the BOK expects the domestic economy to expand 1.6 to 1.7% this year. In February last year, the central bank predicted the economy to grow 2.3% in 2025, but it cut the outlook to 2.1% in May and August, and again to 1.9% in November. This time, it downgraded it to 1.6 to 1.7%. In just 11 months' time, the growth outlook was slashed by as much as 0.7 percentage points. In 2020, the first year of the COVID-19 pandemic, the government added 66 trillion won, or over $45 billion, to the national budget by allocating supplementary budget 4 times. The KDI lauded the move for preventing the economic growth rate from falling another 0.5 percentage points at the time.
계엄과 탄핵 국면의 효과를 감안하고 당초 전망 당시에 가정했었던 전쟁 등이 그다지 낙관적으로 흘러가고 있지 못함을 감안하면 불가피한 성장률 하향 조정이었을 것으로 봅니다.
In its interim review, the BOK ran its predictions assuming political uncertainty will be resolved from the second quarter of the year. This implies if the prediction goes awry, low growth could get worse. Pundits say now that the central bank has significantly slashed the growth outlook, chances are high that it will cut the key rate as well. However, the effect of a lower policy rate can only spread further if additional interest rates at commercial banks are stabilized. This year, 3 commercial banks, including Shinhan and Industrial Bank of Korea, have lowered their additional interest rates, but NH Bank inversely raised its additional rate.